Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. He has an extreme fear of snakes and pretty much all reptiles, like Indiana Jones. Your host and my dad, Matt Hansen.
I'd like to welcome to the show Kent Ritter. Kent's a former management consultant and corporate executive and startup owner. After successfully exiting his first company, Kent turned to real estate investing. He now is CEO of Hudson Investing, a multifamily investment firm which helps busy professionals scale and diversify their real estate portfolio with cash flowing and wealth building assets. And also, I want to note, he is the host of the popular Ritter on Real Estate. I forgot it for a second. Ritter on Real Estate,
You got it.
an excellent podcast that I actually listen to. So I strongly recommend you guys check that out. So welcome to the show, Kent. I'm glad to have you here.
Thanks, Matt. It's good to be here. Appreciate you having me on.
Thank you. Well, let's go ahead and get right into it. And let's tell us a little bit about how you got into passively investing. Obviously, you're a successful business person, which is always a great advantage when you're doing your own entrepreneurial things such as real estate. So how did you get into real estate? How did you decide, okay, this is what my passion is going to be. What's what I'm going to do moving forward?
Yeah, that's a good question. So I got into real estate really because I was looking for a way to diversify my assets. You know, I had everything in the stock portfolio. You know, so I felt like I was sitting there with all my eggs in one basket. And I knew that, you know, because I was a finance major in college and I learned about portfolio theory, that I knew that that wasn't the right way to set up your allocations, right? You have to diversify. And so I was just looking for ways to diversify, and real estate really seems like, you know, a solid asset class. I know a lot of people have made a lot of wealth in real estate. And so it felt like an area that would be a good fit for me to meet my goals. So it really started as just finding a way to diversify and finding something that could provide some great returns and then some tax savings. And real estate was checking all those boxes for me. So that was how I first got started. And I first got started as a passive investor in investing with other people in their syndications. So it was I still had my W-2, was still working full time, and was just kind of dipping my toe in the water with other people.
Good. So there's lots of things in real estate, particularly in commercial real estate, different assets, sub-asset classes. How did you decide on multifamily? And that's where you focus today, correct?
That's right. Yep. Multifamily is where I focus. I definitely didn't land in multifamily right away. I've invested in all kinds of different things, both passively and on my own. I mean, from doing fix and flips to buying duplexes, right, and building out more of a single family style portfolio, buying notes and you know, selling houses on contract and creating a note portfolio, which I still have some of. I've invested in retail, like strip centers. I've invested in industrial complexes, mixed use type properties, senior living, and multifamily. So I've done a lot of different things. Multifamily really became my favorite though, and really rose to the top out of all these different things I was doing. One, because of its scalability. So all the stuff I talked about, the fix and flips and the duplex portfolio and the notes, those are all fine strategies. You can make money doing any of those things, but they're just not scalable strategies, right? It takes a lot of effort to do one transaction. And to have any size, you have to do a lot of transactions. You know, if you want 50, for single family wise, right, you want 50 doors, you have to buy 50 houses. And that just when you realize what it takes to find a good property and a good investment and do that, and it's just not something that's scalable. And so when I started looking at it and saying, well, okay, how many of these would I actually need to have the income stream that I wanted to have, the math just didn't make sense. It was hundreds. And so, you know, you look for what's the best option. And other things are good as well. You know, I mean, there's, I think, a place for all different types of asset classes, but to me, multifamily, because fundamentally you just need a place to live, right? I think we've all proven we don't have to have a place to work. So I like to keep things really simple. And I like to just go back to supply and demand. And I like to think about, okay, well, shelter is a standard need of every human being, right? We have to have shelter. If you look at the supply and demand dynamics, really in almost any market throughout the country, there's greater demand than there is supply for the product, right? And when you have that, you have price increases and valuation increases. And then the other thing I really liked about multifamily versus commercial was that there's shorter term leases. And I think you're really seeing this play out in the high inflationary environment that we're in right now, right? If you're stuck in a 10-year lease with a commercial tenant, you may traditionally have a 2 to 3% a year rent escalator if you have a rent escalator in your contract, right? But if inflation's running at 8% and you're only able to increase rents 2 to 3%, you're leaving money on the table. Like, you're not able to mark your rents to market every year and move your rents up. With multifamily, especially in the market that we're in now, you're able to keep pace with inflation and increase your rents and take advantage of that extra revenue that is being created. And if you look at a lot of markets that we're in right now, I mean, rents have been growing 10, 12, 15, 20%. And if you were stuck in a 5-year or 10-year lease with somebody that you could only grow at 3% a year, you'd be kicking yourself, right? And so the ability to have just a quick kind of mark to market on leases and being able to to raise rent, and also conversely, if things go bad, being able to adjust quickly on the other side, right? And being able to quickly offer concessions, reduce rent, whatever you would need to maintain occupancy. So just that extra flexibility there.
That's impressive. So I love the fact that you've kind of pre-vetted all the other asset classes and kind of come down to, okay, this is what I really want to do is multifamily. And I've kind of done the similar thing. We've invested in lots of different things, even outside of the real estate, and always come back to, oh, I need to be diversified. So we're in, other things, but really multifamily, everybody needs a place to live. And it's true.
Yeah.
And you're providing a service. There's a shortage of housing in the United States. And that's why the government, subsidizes us from tax credits and tax advantage, because they want us to do this. They encourage us to do that. So I love the fact that you kind of landed there. It's kind of my same rationale is why I'm here as well.
Yeah. I mean, the one thing I tell people to pay attention to is what I call risk adjusted return. And I don't just call it risk adjusted return. Like, it's a term out there, but it's something people need to pay attention to. And I think, excuse me, I think multifamily has the best risk adjusted return. When I think of risk, I think about what's the probability that I'm going to get the return that I expect, right? Now, let me give you a great example. This is a real life example from yesterday. So I will invest in startups from time to time, right? And I know that they're flyers. I know that most likely they're going to go to zero, but maybe they go to 1,000x, right? That's kind of what you're hoping for. So I got a call yesterday of somebody actually letting me know that one of those was not going to go 1,000x. It was actually going to zero, which is not a great call, but I'm comfortable because it's a small piece of my portfolio. It's money I'm comfortable, quote unquote, gambling with, because if you're investing in startups, you are gambling. And sometimes you hit a home run and sometimes you don't, right? Goes back to being a diversified portfolio. I'm comfortable taking those losses, right? So it doesn't really bother me, but I use it just as an example, because I went into that investment knowing most likely it would go to zero, but it might go to 100 or 1,000, right? Now, if you could probably do some math and say that, okay, it's 1,000x, but the likelihood, whatever, and you could probably get to a same overall return number as like a multifamily property. You could say, okay, it's 1,000x return, but the likelihood of it happening is like 0.5%. And so I'm going to do that math, and that's going to be like 20% or something, right? 20% per return. Well, that's very different than looking at a 20% return on a multifamily property, right? When again, you ask, what's the likelihood that I'm going to achieve that return? And on the multifamily properties, I mean, the likelihood is very high. I mean, the way that we are underwriting, my goal is that really we're kind of sharing those numbers that we're almost 100% confident with. You can't always say
Right.
100%, but we're underwriting in all the risk factors, right? We're layering those into the model, and we're saying even if all these things happen, we're still going to provide X return, right? So when you think about it, risk adjusted, the likelihood of achieving the return that's being shared is very high versus other investments where the likelihood may be very low, but that top number may look very shiny, right? So you got to pay attention on how likely are you actually to achieve the returns you're being told.
Oh, wow, that's such good stuff. That really, and that's the risk adjusted is a term I use quite often too, because compare, real estate to crypto. And we do play
Hmm.
crypto a little bit, but I know that can go to zero. This real
Right.
estate, it's backed by a physical asset. It's pretty hard to go zero. Plus, we have insurance. So if there is a hurricane, well, and our tenants can't stay there any longer, we have replacement of our income through insurance.
That's
And
right.
Wall Street doesn't offer anything like that at all. So
That's
you're right.
right.
But you need a combination of everything. It's your risk tolerance. Some people do, we do crypto and people would never touch crypto, but I have a fair
Yeah.
amount in that. But I love that from the cash preservation and from the truly hedge against inflation and recession, when things go tough, people tend to move to apartments. When the
Yeah.
economy is good, people move up to nicer apartments, or if the economy's bad, they move to lower apartments. So that's why I think you're in the B level apartment too. Is that B class
Yeah,
that you
B,
guys are
B and
purchasing?
C, and one thing that we're really seeing widen right now, to your point about more people renting. I mean, we're seeing the gap between even people talk about rents increasing so much, right?
Mhm.
But even with rents increasing, I mean, what we're watching closely is the gap between the median monthly price to own a home, right? How much is
Yes.
your mortgage cost? How
Hmm.
much is your PMI, all that versus rent. I mean, that gap is widening. It's becoming
Yes.
more and more and more expensive on a monthly basis to be able to actually own a home. And so what that does is it pushes more people into renting. Right. And so that's a metric we look at very closely. And we're just seeing that gap continue to increase. I actually just saw today that the 10-year treasury note hit an all-time, it's highest it's been since 2008, kind of
Really?
right. Yeah, right before the crash. And
Right.
so when you think about it, that's what a lot of mortgages are pegged to, right? So
Hmm.
you think of how expensive that
Right.
mortgages have gotten, and that's what's driving that number up.
Fascinating. So what markets are you looking in now? Where do you primarily focus your purchases?
Yeah, so we're really Midwestern focused. So primarily from a market perspective, Indianapolis, Cincinnati, Dayton, Ohio, Louisville, Kentucky, Lexington, Kentucky, some other tertiary markets around Indiana.
A lot of our listeners are passive investors. So what do you look for? And you're a really seasoned company. I know you just hired some new staff, some executive staff and all that. So you're kind
Yeah.
of a bigger operations, but what do you look for to deliver to your investors, your passive investors? What's the focus to make sure that you keep them happy and informed? What are some of the things that you guys do?
Yeah, well, I that's a really good question. I mean, so we've actually just gone through a pretty extensive exercise internally to um, kind of redevelop and repackage, really refocus our mission and our vision and our core values. And as we were, and the reason I bring that up is because that was one of the questions we were asking as we went through this process. And so as we developed our new core values, they're really focused around three things. It's community, and those are the three things that we hope to deliver to our investors. It's community, it's investor experience, and it's performance. And those are our three core values. Again, we think that really that can encompass just about everything. So when you
Yes.
think about community, um, I've been an investor for a long time. I've invested with a lot of other people. I've had experiences that are very transactional, and you kind of
Hmm.
felt like a number, and
Hmm.
you never heard from anybody or you couldn't get a
Yes.
hold of anybody. And we've all had that experience. And I've had other experiences where you felt like you really knew what was going on, and you felt like you were a part of it, and you felt like they really cared to answer the phone, right? Um, and that's why I wanted community to be such a core. So one thing that we're
Mhm.
delivering to our investors is community. I think it's about more than just providing properties. but it's about creating a community of like-minded folks. Because I think
Mhm.
being an investor,
Right.
especially investing in alternatives, can be kind of a lonely endeavor. There's not a lot of people that understand it. There's not a lot of people that do it. Not a lot of friends you can talk to about it, that understand
Right.
it. So in creating a community of folks that are like-minded and want to and growth oriented, and really focusing on that, I think one, we're attracting the type of people that we want to attract. But two, I think we're also delivering a better product to our
Mhm.
investors by focusing on educational events and making them better investors, right? At the end of the day. So that's
Right.
this sense of community. So we're pouring a lot into creating a community around our investors through events and educational content and things like that. The next one is investor experience, which is more down to like the individual investor, right? And what's their experience, and making sure that we're using technology and we're using just our customer service best practices to make
Mhm.
make sure really people have a white glove experience. And then the last one to deliver to investors, I think, is performance. Like, we have to overachieve the market. We have to even beat our competitors. I mean, otherwise, why would people invest with us? I mean, I think liking us and wanting to have a beer only goes so far at the end of the day. Me as an investor, like, I want to see a return. And so I think we have to provide great returns, and we have to provide access to great deals, and we have to structure those deals in a way that, again, have a great risk adjusted piece to it, right? That we're taking
Mhm.
advantage of all the tax advantages, and we're protecting the downside, and we're doing that in a thoughtful way. And so I brought those core values up because that's really, as we were thinking about, well, what are we delivering to investors? And that was really how we refocused those core values, was those are the things that we want to deliver.
Great. You have the end in mind, and how do you get there? And that's what you've really done. That's why I
Yeah.
love the fact you've actually hired a dedicated person to do that, to focus on the investor experience, to make it as simple and easy as possible. And I think
Yeah.
transparency, as you kind of indicated, you're constantly communicating. Like, I'm on your distribution list, so I knew what was going on in your company. I knew you'd
Yeah.
hired somebody. That's how good you are. I mean, so I love that about you.
Yeah, and I think communication is critical, and I think communication is a big part of community, and it's a big part of the experience. I think the worst thing, like, I would use this analogy. So I used to fly all the time, almost every week, right, for my old job when I was a consultant, and I started to notice, it's kind of how my consulting mind works, that there would be times in the airport where people would just freak out, right? And it seemed like chaos, and people were pissed and they were yelling, right? And there were other times where people, like during a flight delay, other times where people were just like kind of okay, and nobody freaked out, and we all got on late, but we ultimately got there. So I started asking, like why is this? And what I really noticed was it came down to communication. When the airlines
Oh,
came on proactively and said, "Hey, here's what's going on. We're working through it. We're going to give you an update in 20 minutes," right? Blah, blah, blah. Most of the time, people were like, "Okay, yeah, stuff happens. Like, that's okay." It was the times where we were just left sitting there for like an hour and a half, right? And you don't hear anything, and you're watching your flight delay 5 minutes at a time, and that people would lose it. And so to me, that was just such a good lesson in communication. It's same problem, same issue, right? It's a
right.
delayed flight. How they dealt with it impacted how
Yes.
people responded, right? And so to me, that's why communication is so important. I think just letting investors know what's going on frequently, like we send out monthly updates, apologize, and letting them know, kind of good, bad, or indifferent,
Mhm.
what's happening.
So give us some more examples. So our typical listener is a new investor. So what are the types of things that you guys like to do? You've already mentioned you've got a dedicated person to make sure that investors are taken care of. So give us some examples of what they should expect of deals
Excuse
that
me.
they invest in the future, given them the Hudson experience. So can you kind of share some of
Yeah.
the detailed things, 3 or 4, the key things that you make sure your investors receive from a service level, the white glove service levels that they probably aren't getting from a lot of other general
Yeah, I mean,
partners?
I think it starts with the upfront process of how they kind of come into our system,
Okay.
right? And so we've spent a lot of money investing in technology like HubSpot and Syndication Pro, and making sure those things work seamlessly together, so that when somebody comes into our ecosystem, they're automatically getting they're automatically getting a welcome, but then they're also getting put into Curtis, who's our VP of Investor Relations, into his queue so that he can go out and reach out to them and welcome them, and he can schedule a call with them. So you're going to get kind of that one-on-one service right away, where you're going to have Curtis as your point person, who's going to be your kind of shepherding you through the upfront piece of the process. And you're able to go online, and we're doing a lot with videos to try to make it really easy for people to go in, and you can actually make like a priority reservation now on Syndication Pro, which is something new that we're doing, where when we don't have a deal going, you can actually go in and you can say, hey, I'm interested for this amount. And what we're actually going to do is give people priority access to our next deal. So if you go and you're on that list, we're going to open our next deal up to that list 24 hours before we open it up to anybody else, to make sure that everybody that wants to get on there can get on there, so that nobody misses out. And that's, so we've got kind of this priority access option, right? So you can set it and forget it a little bit. So in the old days, you'd have to kind of watch the email, and if you didn't go in and do your soft commit right away, well, you could end up on the wait list, because most of our deals fill up within a couple of days. And so now we're trying to give people the ability to say, we appreciate you going out and being proactive and letting us know. It also helps us judge our capital base, like how much we have, right? Or could expect to have. And doing that, we let people kind of get that priority treatment into the deal. From there, it's about getting into the deal, and it's about just making it easy. So things that I've run into that I just hate are like overly complicated subscription documents, where you have to like do a backflip and then throw your pin in the air and just to get into the deal. Right. So we've worked a lot with our attorneys to make our subscription documents two things. One, simple. So you're just not having to initial and check and sign in 200 places. We're trying to just condense it down. Right. But also make it mobile friendly, like e-signature friendly and mobile friendly. So that, because most people nowadays are signing, either through DocuSign, right? Which is what we use, or through a HelloSign, and even sometimes on their phone. Right. And so you've got to make sure, like I've run into things where documents, like the e-sign thing can't just do what the document needs it to do, and it just doesn't work, right? So just again, simplifying the process. So then you're into the deal. And then as you get into the deal, and you make your wire for your funds, and then you get handed to Taylor. And Taylor really is there to answer any questions. Like as you're filling out the documents, if you do have any questions, she's there. She's the investor experience manager. And then if you have any questions throughout the deal, of, hey, what's going on? Or when's our distribution coming out? Or, where's my K1 and when can I expect my K1, right? She's there to answer any question within 24 hours. That's her whole goal. And so I think those are some of the little things that we're putting in place, just trying to make it really easy to get in. And then once you're in, just making sure that you don't have to think too hard, right? Like you may not want to go dig in Syndication Pro for your K1. It'll be out there, but you may have to go do a few clicks. You can just email Taylor and say, hey, Taylor, can you send me my K1? And she's there to make it easy.
Excellent. So listen to Kent. That's what you should expect when you're passively investing in someone, that type of service level, which is phenomenal. It really is. And you're above and beyond. There's no question there.
Thank you. And then I think communication wise, it's really important, right? Each month we get each property each month gets like a 1-pager update that has what's going on, where we are with our CapEx schedule, in process, behind, ahead. And then we track some key metrics so you can see, some trending on occupancy and rents and things. And then quarterly, we do a deeper dive into each property, and we actually bring in some historic trending. So you can see, how has revenue, expenses, NOI, how have they been trending over time? Just to give, some more perspective on how we're doing.
Excellent. Outstanding. Some good tips there. Everybody should be looking at. Those are the expectations you should have for people you're investing with. I love it, Kent. Well, now we're moving on to our, just to get to know you a little bit better, Rapid Fire 5. There's just 5 fun questions to learn a little bit more about Kent and what he's all about.
Sure.
So you ready?
I'm ready.
In my right hand, I have the questions. Number one, what was your nickname as a child?
Just a bunch of variations of like my first and last name from like Critter. So it's Kent
Oh,
Ritter, right? So it was like Critter, K-Ritz, um, just a lot, any variation you could think of like those two things. Yeah,
Critter's
crits,
pretty
all
good.
kinds of stuff. Yeah.
Were you ever called Clark? Clark
I
Kent? Did
was
you get
called
that?
Clark a lot, kind of
That's
Clark
quite a
Kent
compliment there,
thing. Yeah.
Superman.
Yes. I've been called that multiple times. So yeah, I appreciate that whenever I am.
You got the look. You got the big jaw. You're a handsome man. You pull that off. That's what I kind of thought. He was probably
Thank
called
you.
Clark Kent as a kid.
Appreciate that. I appreciate that.
Okay, number two. Are you a morning person or a night owl?
You know, I thought for a long time I was a night owl. But now I really believe I'm a morning person. I've definitely been a trained morning person,
Mhm.
but there's nothing better than getting up early and getting stuff done and feeling accomplished before you even start your day, you know? And so I really try to focus on my morning routine now and doing the things that I can do in the morning, meditating and journaling and visualizations, reading to start the day off right. And I think if you do that, I've just seen it in my own life. I just have a better day. I'm in a better mindset, a better mood. I get more done. And so really
Right.
am trying more and more to be a morning person.
Excellent. I've tried to. So, Miracle Morning with Hal Elrod. Have you read his
Yeah.
book? You
Oh
you
yeah.
described it, so I know you're living that, Ken.
Yeah.
I could tell, and I've read it. It's in my on my bookcase behind me, and he's got
Yeah.
two books, or two or three. I've read a couple of them. I just can't pull that off, and I've really tried. And I envy you that you kind of
Yeah.
were probably natural tendency because people do have it's kind of in your little DNA a bit, your
Yeah.
circadian rhythms or whatever. But you've
Yeah.
overcome that, so there's hope for me. Thank you for sharing that. I do need to
There's
reread
definitely
that
hope.
book. Okay, number three. What would be the first thing you do if you won the lottery?
Man, that's a good question. The funny immediate answer is I don't know that I would do a heck of a lot different because I really enjoy what I'm doing right
That's
now.
great.
You know, my answer is not like quit my job and
Right.
move to the Bahamas or something, right? Because I mean, I'm the owner of the company and I like what I'm doing. Uh, I think what I would do is um, I think I would just keep doing a lot more of what I'm doing, and
Mhm.
I think I would kick up the philanthropic side of things. You know, I've got this
Yes.
goal to start a nonprofit that's kind of a sister company to our to our
Mhm.
business. It really focuses on addressing things like affordable housing and rent
Mhm.
affordability and kind of the other side of what we're doing, right? Where we're making
Right.
money off of on this side where we can actually help people subsidize rents and things. So I think it would be able to get to where I want there sooner.
Mhm.
But yeah, and probably buy a few fun toys, but nothing groundbreaking. I
That's
like where I'm
wonderful.
at. I like what I'm doing.
I love that. That's a great answer.
My wife would probably say move into a bigger house on a bunch of acres somewhere.
Okay, so that would maybe beat the second thing you do. I
Yeah,
like your
to make
impact
my wife
housing.
happy.
Yeah, to make her happy. But the impact housing is really what you're talking about, which I would love to do someday in Michigan, particularly in Flint or Detroit, because they really need
Hmm.
that. So someday,
Hmm.
someday we'll have
Yeah,
to do that.
absolutely.
Okay. Oh, you kind of answered number four. Where, if you could live any place in the world, where would it be? And it sounds like the Bahamas.
I love the Bahamas. If I
Italy.
could
Oh,
live anywhere in the world, you know, that is a good one. It's hard for me to leave the US, to be honest.
yeah.
I studied abroad in Italy. I've traveled
Wow.
abroad quite extensively, and while I love visiting other countries, I always love coming back to the
Mhm.
US. I think I would move, well, probably especially with winter coming, I'd move south. I could see I really like Nashville. I really like
Oh,
some of the surrounding area around there. I could see myself moving down that way.
excellent. I have lots of family in Nashville. I love it. We're down there at least once a year. So I
Yeah.
think that's a good call. And you're temperate. It's not so bad. The winters aren't really terrible there. You can ride bicycle. You can still do stuff
Yeah,
outside. Unlike
exactly.
you're Indiana, I'm Michigan. Yeah, it's
Yeah.
we'll be
Yeah, we get it
escaping in
pretty
the winter.
rough here. That's right.
Yes. I feel your pain, Brad, my friend. Okay, and the final question is, what is one piece of golden advice you would give to new investors to help them get better returns?
That's a good question. To new investors to get better returns, I think, well, everybody's at a different part in the journey, but if you're investing passively, it's really about finding great sponsors. I mean, that's really what you're trying to find more than an individual deal, is you're trying to find people that are going to get you great returns. So if you're investing passively, I think network to find great sponsors, find people you resonate with, and find people that have good track records. Those are the people that are going to get you good returns. If you're an active investor, then I think it's finding a mentor, coach, someone who's been there and done it before and can help you sidetrack some of the mistakes you'll inevitably make, that everybody makes. And I've had, I've really been fortunate to have some great mentors and to avoid some big mistakes in my career because of them. And so I think that's invaluable.
Outstanding closing words. Thanks so much. So tell us how people can reach out to you.
Yeah, you can go to HudsonInvesting.com and you can reach out to me, and we have all kinds of resources there. You can get on our investor list, sign up for our newsletter, check out more about us and who we are. That's really our home base. And the other option I would give is listen to my podcast, Ritter on Real Estate. You can do it, listen wherever you listen to podcasts.
Strongly recommend it. Thanks so much for being on the show, Ken. You're just a wealth of knowledge and just a wonderful guy too. So I'm fortunate to have you here and fortunate to have you as my friend now. And I was on your podcast and I listened to your podcast. It's fabulous.
Absolutely.
Lots of great information on there that you can listen to while you're exercising, riding your bike. I listen to it when I'm riding my bike all the time. So that's when I see you most often.
That's awesome. Well, yeah, you guys have to come on to Ritter on Real Estate to listen to Matt's episode, because you're right, Matt was just on not too long ago.
It was a pleasure. Thanks again, Ken.
Very good.
Take care.
Have
Bye-bye.
a great one.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to HansonHoldings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.